gold is really holding its ground versus US equities. And that capital rotation event is seen when recessions occur. Man, I have some crazy visuals I'll show you later, and that I hope it really helps your audience say, oh, okay, that's what he's seeing, that's what he's watching. Because these are macro events that practically all traders haven't seen, unless like the old school guys. The last time we had a capital rotation event was in the 2001 .com bubble. That's like 24 years ago, in favor of gold. The previous one was like in 1970. And the first one I have for my charts is like the Great Depression one. And I think 1929, 1930, we had one of those. So those are pretty big elements that people should not discount.
Let's dig into that capital rotation event a little bit. We've experienced 4 in the last 100 years, most recently in 2001, prior to that, 1970 and 1930. The leading indicator that you may point to say we're getting close to the next one is gold outperforming the SPX for a duration of time. I would love you to get more granular on that for me if you could, and then expand on the concept of a capital rotation process that leads to a capital rotation event, exactly what that is.
The best thing I could do probably is build one right in front of your eyes for your viewers. I've done that chart so many times. So XAU USD is gold divided by SPX. So monthly chart, gold versus SPX. I'm going to reset the chart.
So gold price versus US equities for the last 120 years.
That's right.
Yeah.
So let's see here. So here, as this goes down, that means the SPX is destroying gold. Of course, gold was pegged right here. I could have done it with a silver chart, but eventually gold is able to put in a bottom versus SPX. And when that happens and it's able to go upwards, I could have done oil versus SPX. I could have done silver versus SPX. When that goes up, this is what I call a bull era for commodities, for precious metals. I could overlay the gold chart on this. I could overlay the silver chart. I'll put the silver chart for you guys. This is a silver chart right here. And look what happens when gold breaks out versus SPX. Silver tracks those capital flows all the way up. And as it unwinds, as gold starts to break down versus SPX, I'm just going to move that over here, starts breaking down. That's the last secular bull era we had for stocks. 2000, so here the first capital rotation event was down here, up all the way up here. Here's the second one.
Roaring 20s.
Oh, goodness. Yes. But this is the thing. In the gold was pegged back then. They unpegged it eventually halfway through they unpegged it, I think, in the mid 1940s. And then after that, they unpegged it finally in the 1970s. So a ratio chart where one of the two elements is pegged gives you less vital information. But here in the 1970s, it's unequivocal. Here in the 2000s, here's a breakout upwards. Gold breaks out versus SPX, the third capital rotation event. Look how silver tracks that. I could also overlay the miners, Jay. The miners did pretty well here. Uranium, copper, oil. So look what's happening now. Silver is already holding its ground. So silver and gold and silver are already in bull markets in their own right. So their own price chart, higher highs, higher lows for gold. Silver, higher lows, higher highs from this peak here. And as soon as it does higher high from the previous peak, then it's a bona fide uptrend. A bull era, a capital rotation event is when SPX, once again, when gold is able to break out versus SPX. Here, there's a bottoming pattern. I could even go more granular. I think right here we have a more meaningful level is right about that 0.48 level. If gold is able to go up above this threshold here, we're going to start having a higher high here. It's already doing higher lows versus SPX. Higher high, that's a definition of an uptrend. It's higher lows, higher highs.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
I'll show you why this is important. Here, I'll overlay the recessions, Jay. Check this out. Recession indicators. Each of these moments where gold breaks out versus PX, there's some turmoil. This is the first capital rotation event. Very important here at turmoil. Here we also have here the second turmoil halfway through that bull era for gold. Mm-hmm. Here on the turn, we have another recession. And here we have the GFC recession. So we have two sections here. Even here, that small recession we had back in the March of 2020, yep. Gold was breaking out versus, so that was just testing this bigger breakout line. Look, this is the first piece of evidence that we're probably going to be in a recession as soon as this turns, if we're not one already, because I have to show you another chart. Check this one out. This is the unemployment rate. It's crazy how people aren't looking at that anymore. I'll remove all indicators. I'll remove all drawings. And I'll add the recessions again. Recession indicator. Check this out. Every time the unemployment rate off a bottom goes up 20, 25, 26%. Here, let's say 25%. Recession, like really early recession. Look here, second, another recession, off 25% off a bottom. Off 25 in the recession. Success rate, 100%. Here, the 2001s. I'm sure your eyes is already going to be here, that 2020. Look how much we've moved already. Mm-hmm. Am I the only one looking at this? A lot of people have looked at this, right? 100% of the time, there's a recession, officially declared recession, once the unemployment rate moves 25, 26% off the bottom. And it's more than that. Look at the recession. It doubles from there. The unemployment rate, it doubles from there. Nominally, right? Here, it doubles. Mm-hmm. Here, doubles on that second wave. Here, it doubles. Sometimes it even triples. Here, it doubles. So what I'm seeing here, and the Fed's probably looking at that also, they're seeing the rate of change. You're seeing that unemployment rate, even if it's still low, I know people say, 4%, it's kind of low. Yes, that's fine. But they're reacting to how is it getting to that 4%? It's off a super uber low, moving up. I think we're going to get unemployment rate like above 5 there if this continues upwards. So this in line, remember the recessions I showed you in that previous chart, they also align with gold breaking out versus PX. So now you have the unemployment rate in that capital rotation process. If you see, you could see that like as check marks, Jay. Every time I show you a piece of evidence, okay, check. The setup's there. This has not unwound. If ever the unemployment rate starts unwinding and then it breaks down a rising trend line, I say, okay, the risk is off. But right now, when I see that, I say, oh my goodness, there's something. People are still not fully grasping what's around the corner.